been a great honor to just sort of explain different areas that they want our team to look at. So we'll be doing a data segment, and then we're very, very close to a lot of major trends in tokenization and DeFi and many of the sort of the big themes that are beginning to sort of interlock that we're talking about here.
Thanks so much, Toby. Can I come to you next, Francesco? If you can just unmute and introduce yourself briefly.
Yeah, thank you, Helen. My name is Francesco Boni, and I run R-Square.io, which is a platform that allows users to buy tokenized fine art. Basically, we get fine artworks from prime artists and prime art galleries and collectors. We tokenize them, meaning we divide them in shares, exactly like you could compare it to an IPO. And users can buy just portions of the artwork, effectively getting into an asset class that is not available for everyone because there is a very high entry barrier in terms of pricing. Thanks to tokenization, we can make it more accessible. Like we can bridge the gap between finance and art.
It's a really fascinating trend, and the idea that anyone in the world can sort of take a stake in a major piece of art is a completely new thing. So we're going to come back to you a bit later and hear a bit more about that. I'm going to ask now Paul Griffiths to introduce himself as well.
Hi, my name is Paul. I'm CFO of Consilience Ventures. We're an ecosystem that uses tokenization to invest in and accelerate startup companies and bring to them experts that can use tokenization as a more efficient way of sweat equity. So it helps people to really accelerate the startup and really make it grow faster.
Thank you so much. Really interesting business model that you're developing and using tokenization within your platform. And I think Radouanne works together with you. So he's going to give us an overview of what tokenization is and what we call tokenomics. So the economics of a token-based system, which is a whole new field of economics that's really developing and is kind of in an experimental stage in a way. So Radouanne, would you perhaps introduce yourself and then take us into the slides so we can give the audience a bit of an overview of what tokenomics and tokenization actually is?
Okay, thank you. Hi, my name is Radouanne Oudrhiri, so Rad, most people call me Rad. So I'm co-founder and chief data scientist within Consilience Ventures. So Paul gave a brief presentation of what is Consilience Venture, and I will be talking about the token economy and tokenization in general. So what I'll do is I'll go and have a definition actually of tokenization and even token. And so again, the word token, I started from a definition. Let me just remove this from the dictionary. And again, a token is from the dictionary defined it as a thing serving as a visible or tangible representation. So definitely it is a representation of a fact or an object or even quality and feeling. And definitely, again, that could lead to some confusion. So we can talk at some pictures here from the tokens that are given by Casino to a reward tokens, to security tokens, to even here what we call a token ring or tokens that are there to run a network. Now, another definition, again, is a voucher that can be exchanged for goods or services, typically one given as a gift or as a promotional offer or whatever. The point why I started from the dictionary definition is I wanted to say that actually the concept of token is not new. It's actually very old, and can that also lead to a confusion? It's not something that come only with the Bitcoin, nor with the cryptocurrency in general, or with the blockchain. Now, this is, having said that, I'm going to go now and then we're going to go into much more detail, and we'll be talking about more a digital token rather than a plastic token or a dongle here, like for example. So, but first I would like just to attract your attention to something which I call metaphor and neologism. Now, with the appearance of Bitcoin and blockchain, definitely new concepts have been created. Now, these concepts are most of the time founded on analogies and neologism. And again, there is nothing wrong with analogies and neologism. A neologism, I mean by we creating a new words, but we should be very careful about that. Metaphors are actually very effective way of representation and mental models, but they have their limitation. They are generally, these concepts are inspired from pre-existing concepts. So they build on other concepts, and what we try to do is try to have a comparison. And if we are not very careful, most of the time, these analogies do not illustrate the operation, the functions, or the specificities of these new technologies. The second, it's a payment method. And third is a value reserve, which a reserve of value. Now, Bitcoin, through its evolution and mainly the high value of increase and the high cost of transaction, is incapable of satisfying the first two functions. So it's no more can be used as an account unit, nor as a payment method. It's too expensive, or generally it's definitely confined to some kind of transactions. So what is happening is actually Bitcoin is more perceived as a virtual money, or is more similar to a virtual money, or even a value reserve, almost some kind of sort of digital El Dorado. And that one day we hope it will become as a substitute for gold. So actually Bitcoin is more similar to gold, and even a lot of terminology like mining, etc., are actually closer to gold rather to money as an instrument. Now, again, I would like just to attract your attention that not all tokens are Bitcoins nor cryptocurrencies. And this is what I'm going to be a little bit developing. So what is tokenization? And I'm going to be definitely focusing on the concept of asset tokenization. So asset tokenization is this process of converting a right to assets, whether access, selling, transferring these assets with economic value into a digital token. So exactly, I'm going to have some asset that could be estate, it could be art, it could be luxury, it could be a digital asset by itself. And what I'm creating some kind of digital asset here, a number that is long, that is unique. Now, one of the things that this tokenization is going to enable me to represent objects. Now, whether these objects are physical or material or virtual immaterial or not. So again, not all tokens are necessarily related to an object. Tokenization does not stop objects from being replicated. However, what it means is that only the entity or the person that is in possession of the token can prove their authenticity and originality, which means it acts as a sort of license or certificate or right of ownership, which is good typically for luxury, for art, and even for digital assets, because it proves what I am the person. And then its association with the object, then it tells well, it is authentic, it is original, I have the right of use. Now, it may become also by itself an asset. And when it becomes an asset, it has its own value and it becomes exchangeable. More than anything else, it enables the identification of assets in a unique one way, and it facilitates the traceability throughout the entire supply chain. And this is very important because in this case, it enables me actually, we're moving from a concept of trust and confidence to prove that actually where I move it into a different state or a part of the supply chain. It enables also transfer of assets in a digital format throughout the world, which make investment actually easier. It democratizes investment and make it more convenient and efficient. But also assets can be divided into smaller chunks or units, so that's again increase their liquidity and enable more participants, which is again going into this concept of typically here we are, everybody can become investors and everybody can have access to this asset or part of the asset. Now, not all tokens are based on blockchain, or not all tokens require blockchain. However, blockchain or distributed ledger in general has some attribute that could be very appealing to the investors. And I'm taking it here more from the tokenization point of view. There are much more other attributes like decentralization, disintermediation, etc. that I'm not talking about here, but I'm talking more on the impact on the token and the asset tokenized on the blockchain. So what it makes them immutable. So what does it mean? It means that once a holder acquires token by means of finding or investment or other service, nobody can erase the ownership. And this is very important because that's what's going to give this concept of trust. It becomes accessible. So again, now multiple people within the world using their computational device can access to this token. This fractionality also is very important. We discuss about it because now we can divide the asset or a representative of this asset into small units, which give a greater liquidity. It is cost effective. And the other aspect, which is the transparency. And by transparency here, we mean that we eliminate this asymmetry of information that is related to the transfer of ownership, which means that actually me as an owner of asset, I know as much as you because I have to put this public on the blockchain. And these are all good attributes for commerce, for investment, and for creating trust into this token. Now, so we say that actually the token is this conversion of an asset into digital token, and we can see different type of functions that are related to the token. But all of them, they enable the user to have rights and or privilege that are either economic or reputational. So either going to be some kind of social aspects in general, or they give rights or privilege that are economic. And we classify the tokens or the function that are fulfilled by the tokens in 4 functions. Application-based or applicative tokens, as we call them, they generally give the right to a service or a function. For example, Filecoin, I can use it for transferring data or function, and that becomes as a sort of license. Participation tokens, and they enable the user to vote and or participate in governance. So that's exactly what at least was supposed to happen with the DAO members, where actually members can vote on investment project. Reputation tokens, that's probably one of the oldest one, loyalty or a liability related to the user. And one of the example is the Oudrhiri for market prediction. And last but not least is investment token, which actually shares or equity on an initiative, a project, or a venture. And then the shares, they're going to lead to dividend and or voting right. Now, of course, sometimes it happens that we have a hybrid function that combine all of these functions or part of these functions. So now coming to the token value and the token economics. So the value of the token is directly linked to the associated objects and or supported services. Again, not all tokens are there to represent objects. Some are actually just service. Typically, this is the case for the Bitcoin or Ethereum. There are services behind that, and it gives me a right to a set of services. And the value of that token is generally linked to the object that it represents or the perceived services that it offers me. Then what is token economics? Token economics is the study, and in particular, the modeling of how the tokens work within the broader ecosystem. And by the broader ecosystem, we mean the members that are participating into the exchange, the trade, and of these tokens. And that ecosystem could be either private or public, or what you call permission or permissionless, which means it could be public, or actually the members of that ecosystem themselves can be curated, and then they act as a club or whatever. But what generally token economics include multiple aspects. First, and the most important part, is the token valuation, which means how do we attribute value to the token? Now, this value is definitely going to be function by itself on demand, on offer, on the objectives represent, assets, etc. The token distribution, how did the token are distributed to the members? do we have categories of the members? I mean, for example, Paul discussed about Consilience Venture. Consilience Ventures, we have investors, we have startups, we have experts. What is the ratio of distribution between investors, experts, as well as investors? And of course, that's going to drive some behavior. So therefore, what becomes very important within the token economics is the concept of behavior. Why? Well, because these ecosystems are network, and all of these networks have what we call network effects. And what by network effect, we mean two things. We mean, or multiple things, by the way. We means definitely that actually members can attract other members. We means also the dynamics, and we means also the game that is playing within this. So therefore, not only we would like to observe the behavior of these holders, but sometimes we want to create incentivization mechanism as well as governance mechanism for driving behavior or for stopping holders that to game the system. Because if you game the system, then you're gonna lose trust. In a nutshell, as a synopsis, so what we have, and I try to represent this as a sort of diagram, we got the token. The token represents assets, and I put this as dotted lines because it doesn't have to represent an asset. That asset could be linked to physical or virtual objects, but generally there are a set of services. These services, they are just, again, virtual, or they may be based themselves on assets. And that give rights and privileges. Then the token becomes an asset by itself, and it has value. And in order to do that, there are a set of functions, and this function that could be, as we mentioned, that could be application-based or participation, reputation, and investments. Now, if it's participation, generally they give rise to governance and vote, right? Reputation related generally to reliability of the user and or loyalty, and then investment that give shares, but also some of them give right to vote and governance. And last but not least is then now you're going to need to include the ecosystem, the network effect, and the dynamics. And this is what's going to lead the token economics, which is the study of that ecosystem, and more importantly, building a model. Now, why am I talking model, and why am I emphasizing on the model? Because actually, we do not have all the data. Now, all of these are just representation. And remember that these are digital assets, and therefore we need also to understand prior and in a predictive way what is happening. Now, as an example, and I'm not going to put much time on this, just to give you some example. So Consilience Venture, as we discussed, Consilience Venture is definitely an ecosystem that gather startups, investors, and experts. And what we are doing is actually we're tokenizing the venture capital industry, which means that what we at the token here is linked to equity in the startups, which becomes what we call definitely, this is an asset-based, an asset-backed token. It is, which becomes also a utility, because in this case, it can be used for fulfilling services that are requested by the startups, for solving problems, and that's hence where you have the experts, but also it can be exchanged against money or cash, sorry, from the investors, or by the way, even other experts or whatever. Now, definitely the token economics here consists in attributing value to that token. So definitely it is based on the value of the entire portfolio of startup and the investment that we made into the startups. And our objective is to make this startup healthier and to grow. So therefore, here we have an active action on this. And therefore the experts and the investors have skin in the game to work on the startup. And the healthier is the network, the higher is the value of the tokens. Now, how do we, when we talk about modeling and token economics, it consists in understanding what are the parameters and the key characteristics of these startups, because these are the key. So definitely, for example, what we have done here, we looked into each startup, we looked to the innovation and the technology life cycle. How do they behave? For example, are we investing into deep technologies, or are we investing into B2B, B2C? They have a different behavior. There was an adaptation curve, which we call the S curve. Then For each startup, we look into its maturity, which is the life cycle of that, as well as the discipline, the valuation of the startup, the failure rate, and other parameters. And then we combine this and we create what we call a function that combine all this network and enables us to predict the value of the token. So that's in a nutshell what is token economics.
Thank you, Radouanne. You made a number of really important points there, and I think you can see why I said this is a whole emerging field of economics in itself, because we're talking about incentive structures and how you create valuations on new types of assets, things that we've never really been able to do before because of decentralized networks and systems. So I've got lots of questions which I'm going to come back to in the discussion, but I think just to sort of sum it up a little bit, the key points for me is that tokens can be used in many different ways and not synonymous with cryptocurrencies necessarily, which is not something that people who aren't familiar with Bitcoin and other cryptocurrencies will necessarily appreciate. So it's not just, the transfer of digital money. It could be transfer of access to a network, which has a utility. So a sort of reward point type system, or access to services, or it could be a more traditional stake in an investment of a physical asset like property or art, or it could be, some kind of other asset that we consider valuable, somebody's reputation, or, a variety of things. So really, really interesting. And also, some of the benefits that accrue to tokens because of the nature of blockchains and distributed ledgers. So the fact that you can't edit it, no one can take your ownership away from you unless you don't know how to deal with the security issues surrounding tokens, which we'll come on to. The lack of middlemen, and the fact that you have this trust and that you can access it from anywhere in the world. And I think that's one of the really interesting parts we've seen as we had initial coin offerings and so on, with all the problems that they had. But, suddenly startups can get access to capital from all around the world in a way that they could never have done before in more traditional venture capital or other forms of fundraising. And the investors themselves can also get access to opportunities that they wouldn't have necessarily had access to before. So really interesting to have the big overview. I'm going to come now to Toby, because Toby's going to give us our NedTech Data session. And I guess one of the things I want to ask for Toby is, I guess, how far are we along with tokenization? How real is it? Is it just the sort of preserve of kind of a few geeks and crypto enthusiasts, or is it something that's really developing into a more mainstream phenomenon? We can see if we can come to Paul briefly, just to talk about from the investor's point of view, how does this kind of change the game in terms of the venture capital industry? Because, one of the issues is, perhaps more traditional players get preference, in terms of, things like diversity, gender, background, the geographical access that people have to capital. If you're in a country where you don't have traditional infrastructure and opportunities in Africa or parts of Asia, let's say, how does that change the landscape?
It's a bit of an overused term, but it does democratize these things. It opens it up to a much wider net of people, and enables people who in the past would have struggled to get involved in perhaps working with a startup can share in the success. For anybody that's done it in the past, sweat equity is a fairly common thing where rather than being paid in real money, you're paid in equity of a startup that may or may not give you a return at some point further down the line. By using tokenomics, you can create a pool of startups that you can work with, and then have something that's far more liquid and enables you to share in that growth at the same time as also being able to pass those tokens around. It's a far more fluid system and gives people the ability to invest their time but get a share in the growth of the company they're working with.
So as I understand it, you're not just investing in startups that might be, blockchain startups or startups that have token models, but you're actually also developed your own security token for your own business ecosystem. How's that come about? Why is that a benefit over what's come before?
So we invest in deep tech startups. And we've created a token that is essentially, we invest that token in exchange for equity in the startups. They receive those tokens and they can then swap some for cash, because people do need cash from incoming investors, and the remaining tokens they can use for expert services that enable them to accelerate their growth. And those experts in turn they essentially own a small portion of the pool of companies. Rather than just spending your time with one company and getting shares in that one company, the token represents, at the moment, 5 startups we've invested in, that's growing. And so they're sharing in a fund rather than in an individual token. And in time, they can sell those tokens to incoming investors as well if they need the cash to continue. So it creates an ecosystem where the token is central to it. And they're only created when a startup is invested in. So the token itself does have a real asset behind it. It has real value, which, as compared to Bitcoin, where the value in Bitcoin is Bitcoin, the value of a security token, there's a real world asset behind it, so that it has a real value. And obviously, as the startups grow, then in value, then the token grows in value.
Perhaps easier for people to understand that one, in the sense that, you know, people understand what securities are, and there's existing regulations surrounding securities. And so really a security token is just a digital version of a traditional security, but it has these flexible elements which are maybe not possible with a traditional security as we know it now.
Yeah, very much so. It is very similar to a security, but it has greater liquidity, reduced friction, more transparency. It's more accessible to people, so it just makes it far easier for people to get involved.
No worries. Just talking before about security tokens, but we'll come back to the overall crypto and token market first. Yeah,
no, 100%. So the obviously the wider crypto market has been on a bit of a tear, and going into the likes of ETH that has performed even better than Bitcoin if you're looking at the market since May. Similarly, Bitcoin Cash has not done so well, similar performance to some more equity market style returns. Litecoin has been catching up with Bitcoin, and then XRP a bit behind that. And then so this is how they did compared to BTC. So many of the so this is looking at how they did over 100%, but ADA Cardano has been one of the big winners in the market. There's been a lot of excitement about how they've been developing their sort of new Shelley offering, and then XMR and Binance's coin have also done very well. What I think is interesting, because I think in some ways this is talking about the tail of the crypto market. What I think is interesting is if you backed any of the top 100 cryptocurrencies, I guess slightly by definition, this is a tale of winners, not losers. But this market has been, in the last 3 months, a major bull market. So if you backed Civic, which is great to see roaring back into fashion, a identity project, you would have made a 5 times return. YFI, even after a collapse in its price, has done pretty well. One to note to be careful in, because at one stage you could have made a sort of 8 times return on YFI as a DeFi protocol. So it's done rather badly lately in a sort of but it was YFI is very much like Aave at the center of this sort of decentralized finance phenomenon that I think is tricky to see apart from the token market. So just because there's been a lot of financial innovations being put in place as to what you can do with tokens, and I think my personal feeling is the best thing that's possibly happened to the token market is the advent of decentralized exchanges rather than centralized exchanges. So you've had the likes of Uniswap, Aave, Balancer, these kind of things wresting some of the power from the centralized exchanges like Bitcoin, like Binance, KuCoin, even Coinbase. Some of them acting as very sensible stewards. I mean, many people, I think, would say that Coinbase, I think there would be very few people sort of chucking bricks at Coinbase as a key constituent in the space, but there's been notable hacks of KuCoin, for example, that had 200 million stolen, although I understand that it's in recently. So I think the centralized exchanges have had significant problems, and we're beginning to see a lot of shift towards, in the sort of axis of power in the space, towards the decentralized exchanges, where people are able to spin up new ideas in a day, provide liquidity on them, and see what the market has to say of them. And so I think it's heartening to see Aave has been doing very well lately, and it's got some very to what Radouanne was talking about. They've got some very innovative ideas about the linking of real world assets to a tokenized entity. And I personally think that's one of the most important game-changing things of the tokenized space. I just recently started advising a business called Materium by one of the co-founders of Ethereum, Vinay Gupta, who's really spent a lot of time thinking about how you legalize the representation of that space. But I think Aave have been definite thought leaders there, and Civic, hugely exciting in what they've done. And I think YFI have been very innovative in that they effectively were creating a way for you to look at new liquidity pools and essentially provide people a bit of a black box to jump into new interesting things. So I think Yearn Finance and YFI, a lot of the shine has come off that project, which is very common in the token market. The phrase pump and dump is very sadly far too common in the token market, where there's a lot of hype and things go up and down. But I think the big thing to note is that even if you backed the worst asset in the top 100, your risk was losing 17%. Of course, that in the last 3 months. Of course, if things dropped out, there was a lot. But anyway, I'm always super keen. I'm keen to dive into the discussion. This is a summary, really, of what's been going on with the top 100 tokens. And I think that there is so much going on in the wider token market that we're super excited about. Actually, at Novum Insights, you can go to our website. We've got a DeFi calculator that allows you to look at how the returns on liquidity provision for 1,500, which are effectively all the Uniswap spares with more than $10,000 of liquidity. And you feel free to have a look at some of the data there, and you can figure out what you would have won from liquidity provision on Uniswap. And I think liquidity provision and staking are two very important elements of the token market. So the idea of liquidity provision is you can essentially effectively on a decentralized exchange help exchanges make a market using your own tokens, which is massively financially creative and has seen Uniswap go from very limited amounts locked up on it to more than 3 billion at the moment. So I think these kind of the infrastructure is very much being put in place for the token market to begin functioning properly as a market. And then I think what we're seeing there is, yeah, I think we really are in the age, to Helen's question when we started, of real world applications. I've always been very excited by the Consilience project, Radouanne, and I'm super excited. I think the security token market itself, we haven't really touched on that in this presentation, but I think there's huge building blocks being put in place there. I think the stepping stones are still tricky because the nature of a security token is you're needing to abide by securities regulation. But I'm super excited to carry on the discussion, and looking forward to talking more.
Thanks, Toby. It was a great overview and really interesting to see how things are developing. And I think particularly a lot of different strands coming together in the sense that we've got, very poor or negative interest rates. We've got a lot of uncertainty. So people are looking to diversify their portfolios and see what they can do to still make a return. And obviously, cryptocurrency and different types of tokens are providing very interesting opportunities for investors. I want to come to Francesco now, because you're running a project that actually is about connecting physical assets with digital tokens. And I wanted to understand a bit more about how it came about, what was the driver for you as someone in the art world to do this, and how good has the take-up been? Is it something that you're getting kind of traditional art investors, or is it more of a young group of new tech-minded art investors that are coming in as a result of what you've done? So it'd be lovely to hear about your project in a bit more detail.
Thank you, Helen. Well, the way we came up with the idea was coming from the finance sector. We wanted to demystify the problem of accessing art. Buying art is something that is very niche, and usually technology is there to create bridges and make things easier for the most. When we saw the blockchain becoming more mainstream, we thought of starting this project that was in the drawer for a while, and we launched 3 years ago. We started 3 years ago, and now we are live with our platform. The idea is quite simple. Replicating the concept of an IPO in the art market. When art is an asset class, people invest in art and they sell art and they make capital gains, and it's a big industry, $1 trillion industry. Why not making it structured? So exactly like an IPO, what we do with tokenization is we issue tokens that are art tokens that represent a portion of the total value of the artwork. Users can simply go on the platform and buy those shares, becoming effectively owners of an artwork that they were not going to be able to afford without the support of the technology. And
meaning that it's broken down into fractions of the value of the artwork. Yeah. So they might not be able to buy an entire Picasso, let's say, but they could have a fraction of a Picasso.
Exactly. The reason why it's possible because of the blockchain is something that already happens today. If we and I, Helen, we go to the art gallery and we see that an artwork is of our interest, we can write a contract, buy it together, and bind our relationship with a deed. By simply applying a smart contract, this situation is scalable to an unlimited number of people. Because, of course, the moment I have to sell, I have to call you or send you a letter, there is some bureaucracy. On our Square, this is done automatically. So the moment there is, let's say, the artwork is rented for an exhibition, everybody receiving their art wallet, they receive their dividends. So it's not discovering fire, it's just applying the right technology to a situation. And I think it's quite interesting, since we are speaking about tokenization, to see a use case for it. At the end of the day, smart contracts are there for this, to automate certain situations that otherwise are just too slow because of bureaucracy.
It's really interesting. And what about, we haven't mentioned this before, but what about the concept of non-fungible tokens, which maybe the audience won't be familiar with, but the idea that you have a token that you can then essentially lock in your ownership of, let's say, a piece of digital art and prove your ownership of that. Is that something that you think
those are the tokens that are available on our Square? Every artwork, when they do their IPO, they issue, for each artwork, you will have a different set of tokens. So now we have an Andy Warhol and a Kit Haring. The name of the token is WLR01, and people are trading, the users are trading those non-fungible tokens. This is very important, as you correctly said, in terms of decentralization and DeFi, because in the future you could have token swaps between different exchanges. Our Square is not the only player. There are several players doing that. The ideal world, everybody use the same technology, and once you buy a token on their Square exchange, you can then sell it on another exchange, exactly like the stock market, when we have the New York Stock Exchange, the London Stock Exchange, etc.
So I think that's interesting because, people in the art world might not realize that. They might think, well, this is only for, sort of digital forms of art. It's not for traditional physical art, but actually.
Yeah, then the pandemic arrived and they all started ringing our phone because if you think about it, the situation is that the art world must look at innovation because art is something very physical. They have art fairs. You must go to the gallery. As a collector, you are invited to see the artwork. This is a way to connect with new potential buyers and imagine an iceberg, where the tip of the iceberg is the money that the artwork is dealing with. And then you have the bottom of the iceberg that is all the crypto holders, the traders, whoever buys on Amazon that wants to look at a new way of buying art without the problem of having to learn something new and get a master before getting into a gallery.
Yeah, so you've got twofold benefit. You've got the benefit from the industry, which probably, as you say, the pandemic has pushed forward because the art world can be quite fuddy-duddy and traditional and used to its kind of maybe sometimes elitist way of doing things, and people know each other and they have a certain network and so on. But actually this is sort of breaking that down, and since you can't fly to an art fair and you can't go and view an artwork in person or meet in person, actually it's probably been a good driver for your business model.
Yeah, it was. And it's and the art world is beautiful, and it missed a generation of technology. They didn't. It's difficult to find even good website for art galleries and stuff. They don't, because it's very retail. They don't talk with each other. There is the element of advisors and brokers that are there, and of course they're defending the rules. But blockchain brings transparency, because every token will basically give you. You can basically see the cap table of an artwork. Like you go on Etherscan and you can see the transaction of if you send one Bitcoin, you can do the same. You can see the transaction happen between an art token. And this is very unique and brings security. Of course, it's an issue for the players that are making money on this lack of transparency of that world, but the future is definitely in that direction.
Yeah, it certainly puts a challenge into the traditional way of doing things, much in the same way as I'm sure it's sort of shook up the banking world when these ideas first came along. I want to just kind of broaden it out to the whole panel and talk a bit about the token economics part, because I think that's one of the parts that people sometimes find really hard to get their heads around, and it is very complicated. And I suppose, from an investor's point of view, it's much easier to say, well, look, if I buy a share in an artwork, I can sort of roughly equate that to something I know, going back to what Radouanne was saying about we make analogies and metaphors that make sense to us from a traditional way of doing things because we don't understand new technologies. But what if you've got a project, let's say you were talking about, prediction markets or reputation markets and things. Haven't we just sort of created, I'm playing devil's advocate here, but haven't we just sort of created a whole bunch of kind of pseudo decentralized bankers who are just printing money and saying, well, I'm going to print this much money. I've decided it's worth this. I've decided that people are going to behave like that. How on earth can someone who's not a sort of an expert in the field unpack what a token is really potentially worth? Can they even pretend to do that, or is it all just guesswork? I guess, Rad, maybe you can take that one. It's not an easy one.
Yeah, I can start. So I think, again, we are often limited by this analogy and metaphor. So I think in this case, the example that you gave, I think I would bring it more actually to the network ecosystem and the platform. So rather than just focusing on the token, now these platforms are creating business model. And the token is just here to represent a value unit. And this value unit, whether it's the token itself or other value unit, could be, by the way, data, it could be art, it could be, in our case, the equity is exchanged. And however, what the token gives is actually this traceability, this identification. So the token is not just the asset that represents, is also the services. And these services are definitely related to the exchange, the ease of use. Paul was talking about, for example, the Swiss equity, the fact that we are easing the Swiss equity for experts and solving a tax problem or solving actually the sweat equity. Actually, nobody like to give sweat equity. That gives a lot of value. So you're creating value on that value unit. So what I see when people join this kind of a platform, there are two things that they need to look at. Is the curation process, because that's very fundamental. How do you curate the members? How do you curate actually the object that you are doing? And the second one is the self-regulation, which is the governance. Because if there was no self-regulation, these platforms not gonna evolve. The token is just a mean to an end. And we should not focus on the token by itself. You are definitely, why do you join this, and what are the value that you are gaining from this? That's, I think, for me as a member or as a user of this platform, what I look for.
And yeah, I mean, that's certainly true. And obviously investors will look kind of broadly, hopefully, if they're long-term and sort of sensible investors, at, value creation rather than short-term gain. But I know certainly in the ICO, kind of the initial coin offering kind of free-for-all, people would invest in any old token because it was going to make supposedly a good return. And, would it be 100x or would it be 20x or what would it be, and it doesn't really matter if it's, Jesus coin or Trump coin or whatever, rubbishy coin it is, or Biden coin, let's say that might make good money right now. But, whatever kind of coin came along, if it looked like it was going to be, making them some money, they would stick some bets like horse racing essentially and just hope that one of their bets would pay off. So, more sophistication, I think, has come into the market now, and some of that kind of speculative stuff has been clamped down on by regulators. But from the point of view user, it's still a bit difficult to say. If someone says to you, well, I'm going to give you 150,000 of my token, what is that really going to be worth when it launches on an exchange and when it circulates, and what are the network effects of that system? Because it's great. I mean, maybe it's a great business proposition, but maybe no one's using the community or using the network.
Well, that's why, again, the token economics, it should not be just a black box. So this is what I talk about the model, because in the end, what we are doing, we are just building some kind of formula and says, okay, now in order to calculate at least from the one I have seen, in order to calculate the value of that token, these are the factors that enter into that. And I think within these factors, we have to clarify and to educate the users that there are different levels of factors. For example, I'm going to just give the example of Consilience Venture and then the first order, we call them first order, second order, third order, etc. The first order are the startups, because if there are no startups, there is no value for the token. So that's the first thing. So you need to understand what are the first value. These should probably represent 80% to 90% of your token, hence why the security token are based. Now, there are the contributions and the quality of the network as a whole. And then in this case, how do you contribute? In other words, what are the actions that you are bringing in order, for example, in our case, to make the value of the asset or the object that is related even better, which is the curation. How is this transparent? How the members are active into that? And how does it affect the network effect? Now we are going into the second order and the third order. And these formula that we're going to come with it actually has to be, there was a model, but then it has to be backed by the data to show that. And this is then this has to be published, or at least made in a sort of visible way to the actors and to the members. For example, in our case, a lot of people to say, okay, what are the costs? How the cost, who pays the cost? How is the comparison between the cost for selecting a startup, curating a startup comparatively to what venture capital, the 220 or whatever it is, where then we have to say, okay, this is the cost, and this is how this cost is paid by all the members, etc. So that's all of these things have to be transparent, and it's like joining. I'm talking at least here for the one that are asset-based or club-based, or Now it becomes something public that is a little bit more difficult in this case.
Yeah,
and especially if it's not related to an asset. That's in this case. But for me, I think the future is going to be asset-based plus services. It's like even when Francesco is talking, when I'm listening to him, it's not only the art piece that is delivering. They're delivering a lot of services around that. And these services have value.
Yeah, absolutely. And I think people are starting to realize that any investment, that there are metrics that you can look at in token ecosystems that are fundamentals that you need to understand before you want to dive in. Toby, do you want to just make a closing comment on that? I cut you off before, I think.
Yeah, no, I was super interested on the tokenomics question. And I think in part, the question was really, really pertinent. I'd say the one thing, if you look at how Bitcoin and Ethereum divided their token allocation, they were two of the best decentralized groups probably ever created in many ways, right? I don't know enough about sort of how other systems have been built, but I can't think of many where the decentralization of the sort of, clearly, like a lot, there are some major Bitcoin miners who are controlling a lot of the network in Bitcoin, but to all extensive purposes, like unless Satoshi Nakamoto was to wake up tomorrow, the Bitcoin blockchain generally is very, very widely distributed to all sorts of different people. I think the founders of ETH, people like Vitalik and Joe Lubin and Gavin Wood and whatever, did a really great thing for the crypto industry, because they, like, I think I was hearing Vitalik had 0.5% of the ETH network or something like that when he founded the thing. So they went really, really, and I think in diligencing these things, you should start thinking about what is the interest of the people, what are their motivations, where are they setting. So are they, like in the case of both of those things, they were doing revolutionary sort of creations that transform finance, and at the same time we're thinking very hard about how to encourage the network effects that Radouanne was talking about by just going, how do you make this thing technically brilliant and widely held, right? So that and I think to a certain extent the token market has slightly lost its way, right? The XRP was a famously egregious example where I think the founder of XRP ended up being richer than Mark Zuckerberg and the richest man in the world for a brief moment, as XRP did very well.
So this is Ripple, the network, and XRP, its token. Yeah.
Yeah. And I'm still a fan of XRP and Ripple to a certain extent, perhaps like boo hiss to some in the blockchain world who would say, but but I think that already you realize if you look at a team and they have 40% of the token supply, which I think was the case in Ripple, then question marks need to be sort of raised. I'd say to Helen, we're already going through another wave of ridiculous coins, although there's a fading out, and there was a food craze and all sorts of different things, sushi and pickle and whatever, right?
We were also hungry during the lockdown. Everyone named their token after a food. You know? We should have had
like no takeout, so food tokens. But I think the market generally is super exciting, and a lot of those, I mean, YFI we talked about earlier, and even sushi for a brief moment was extremely innovative, right? In its in a slightly pastiche way, and a terrible investment. But yeah, no, it's very interesting. I think there's a lot to be done, and tokenomic. But I think there are people who can guide and educate the space, and it's very collaborative.
Yeah, and I think that's sort of what's happening now, just to bring us to a close, because we're coming to the end of the time. But I think people are developing metrics, they're developing ways of understanding this, and investors are turning to those who have really developed good ways of assessing what the incentive structures are within these networks, what the transparency level is, what role the founders are playing in terms of having a large stake in the future of the network, or whether it's fully decentralized or only partially, and so on. So fascinating area. It was great to hear all the different perspectives, how tokens are ripping up the future of venture capital. I think initially when we had the ICO craze, people said venture capital is dead, but maybe it's not dead. Maybe it's being reinvented through a different mechanism, and actually the expertise that's in venture capital is not being lost, but it's being reworked in a way through platforms like Consilience Ventures, which is very interesting. We've got changes to the art market, we've got changes to the property markets, we've got a lot of different possibilities for tokens, as well as just different types of rewards and reputation systems, or being rewarded for our attention when we browse the internet. All of these different things connect to tokenization. So it's a whole new world of innovation, and great to just get a little taster into it. So thank you very much to all the speakers. Thank you to the Ned Club for having us, and to my co-host Jane Thomason.